Hey everyone, welcome back. Big day in tech. OpenAI just locked major memory chip agreements, an AI chip challenger raised over $1 billion, and a full slate of stories touching AI, semiconductors, cloud, devices, and regulation. I'll walk you through the key facts, what they mean for markets and developers, and what to watch next. Hit like if you want daily tech briefings and subscribe for quick, sharp updates. Let's jump into the first story. OpenAI's massive Stargate infrastructure just took a major step. Letters of intent with Samsung and SK Hynix to supply high-bandwidth memory for the program. Reuters reports the deals and even notes involvement from the South Korean presidential office. If these commitments hold up, they'll tie huge AI compute demand directly into Korean memory supply, influencing pricing, capacity, and geopolitics. Expect tighter HBM markets and more leverage for hyperscalers and chip makers. Next up, a startup raising over $1 billion to challenge GPU dominance. Cerebras closed a $1.1 billion funding round led by major investors, valuing the company near $8.1 billion and paving the way for a near-term IPO, according to the Financial Times. The company's wafer-scale accelerators target the massive training workloads of large models, and it already counts big cloud and social platforms among customers. This injection of capital signals investor appetite for alternatives to GPU dominance and could accelerate competition in custom AI silicon. Coming up next, how this competition might reshape data center economics. Regulators around the world are tightening focus on AI safety and export controls, with several jurisdictions preparing new compliance frameworks. Companies will face more reporting, safety audits, and potential limits on cross-border model deployments. That means engineering teams should expect added compliance work, and product managers need to map features against evolving legal requirements. Stick around. Next, I'll cover a major cloud pricing and infrastructure shift that could change how companies buy compute. Big cloud providers are updating pricing tiers and introducing new instance types optimized for large model training, aiming to lock in enterprise AI workloads. These moves push customers to rethink cloud architectures, balancing in-house clusters versus cloud procurement. Expect more granular pricing for GPU accelerator hours and bundled managed services that include model ops and compliance. Up next, a consumer device update that's catching attention for privacy features. On the device front, a major vendor announced a privacy-forward update that moves more AI processing on device rather than in the cloud, reducing telemetry and accelerating features offline. This trend pressures cloud services but gives users better data control and faster response times for key tasks. Developers should consider stronger on-device models and edge pipelines to match user expectations. Coming up, a deep dive on cybersecurity threats targeting AI supply chains. Chip supply chains remain front and center as governments and manufacturers negotiate capacity and access. Expect more national initiatives to prioritize domestic production and strategic stockpiles for AI-critical components. For businesses, this means factoring potential supply bottlenecks into procurement and R&D timelines. Next, we'll look at antitrust moves that could reshape how big tech packages services. Regulators are sharpening antitrust scrutiny of bundled cloud and AI offerings, probing whether large providers leverage platform power to squeeze competitors. If enforcement increases, we could see unbundling, new interoperability requirements, or fines, all of which would reshape pricing and product strategy. Product teams should model scenarios for greater interoperability and regulatory constraints. Up next, privacy and security incidents affecting AI deployments. Cybersecurity teams are reporting an uptick in attacks aimed at AI models and training pipelines, from data poisoning attempts to model extraction tactics. Companies must harden data provenance, implement robust monitoring, and adopt encryption for model artifacts. These threats make secure-by-design practices non-optional for production models. Later, a market reaction segment, how investors are responding to these shifts. Markets are reacting to these tech shifts. Chip stocks, cloud providers, and AI startups are seeing volatility as investors price in supply risks, regulatory action, and new entrants. Funding rounds like the Cerebras raise show continued appetite, but valuations now hinge on margin sustainability and differentiation. For investors, diversification across architecture plays and supply chain resilience is prudent. Next, a look at developer workflows changing with these trends. Developers are adapting. More emphasis on model efficiency, on device optimizations, and tooling for compliance and monitoring. Expect new SDKs, active model governance systems, and tighter integration between infra and ML teams. For engineers, this era rewards efficiency, observability, and cross-disciplinary skills. That wraps our headlines. Let's close with quick takeaways. That's the roundup for today. OpenAI's memory deals, Cerebras' big raise, and a landscape shifting under regulations, security, and supply chains. If one thing's clear, it's that AI is driving hardware, policy, and market moves in real time. If you found this useful, like, subscribe, and tell us which story you want to deep dive on. We'll cover the top requests. Catch you tomorrow.